Welcome to the Winnie Podcast. This show is focused on empowering ranchers. Whether you're a seasoned rancher or just getting started, we'll guide you on how to use the infinite banking concept as an alternative way to finance your operations. It's a better way to think about money. Join us as we discuss planning for the future, attracting the next generation, and the art of keeping more money within the family. Here's your hosts, Winnie and Lacy.
Hey, welcome in, everyone. We are so glad to be back. This is our very first session for 2026. And we got a couple things that just popped up for us just over the last couple of weeks about clients that are reaching out or people who are very interested in IBC. And so we'll start off with Lacy. She had an inquiry, and then I will share the inquiry, more the commentary that I received, and I'll speak to that. And I think that both of these items that we're going to be sharing, I know that you guys will perhaps be able to relate to. All right. So Lacy, what came up for you in the last week or so?
Yeah. So just a conversation with actually just a friend, and not even a client. And something that keeps popping up is how most of society, I would say, does not realize that a whole life policy is considered an asset. And so it got me thinking when I was driving, like after I had this conversation, and it's just like, I think this is a podcast episode that we need to talk about this, because if and when there was a large influx of capital coming in, what would we do with it? And this friend, this is what I do. I would put it into real estate. I would buy this and that and earn interest, and I would have the rental income, and I said, okay, that's interesting, and that's all great. But did you know that a whole life policy is also an asset?
Yeah, a dividend. Yeah, absolutely.
Mm-hmm. And I said an asset similar to that piece of land or that house that you say you would buy or whatever. And so that just, and she did not know that.
Mm. Yeah, I think it's just been really downplayed a lot. I think that unless an individual really takes the time to define, the different styles of life insurance, it can quite easily get mixed in with not knowing that it can be an asset. Because I think if you've never been talked about or done any research on, permanent insurance, it's easy to come to that conclusion because, especially if you're like a Dave Ramsey listener or someone who has only ever received information about and spoken to people that only see insurance as a way of having a death benefit, being left behind to either pay debt or to, take care of family. Quite often, if you're not making a ton of money or things like that, then you're only getting term insurance, right? And that is not considered an asset class. So, I think most people just kind of leave it as, oh, I get life insurance if I have a family. I get life insurance if I have a loan, and then leave it at that.
Yeah, I think that like one of our goals is to bring awareness to, hey, did you know that there's a different way? Hey, did you know that your policy is actually an asset? And if you've ever gone to the bank and applied for a loan, you may not realize it or remember, but one of the questions that they ask you is, do you have any life insurance policies that hold a cash value? And if you do, they want to know what that cash surrender value is on the day that you are applying for this loan. And why do they want to know that?
Because it's another place where you're storing money. They want to know what kind of, whether they should loan you the money or what extra reserves you have in case you can't make payment.
That's right. Right.
And to add to what you're saying as well is the sheer fact that you can also use what's in your cash values as a way for coming up for down payment. That is something that the banks will accept, what you have stored in your cash values as a viable place for down payment.
Right. So on this episode of Did You Know, if you already have a policy, a whole life participating policy, you have an asset that maybe you didn't realize.
Mm-hmm. And to what you said earlier, just like most people, a windfall could be the sale of a property, or a sale of a herd, or a sale of what XYZ. And then it's very natural for any one of us to start thinking about, okay, where can I put my money? Where can I do that? However, when we are thinking about putting it into land, or we are putting it into buying more cow calves, or buying whatever, I think what's really important to note here is that there's, just as a dividend-paying whole life insurance contract is also an asset, we also need to really expand our thinking about what are the characteristics of where we're going to put our money. So, for example, if you're going to buy more cow calves, or you're going to buy a piece of real estate, you have to understand that once you put your money into those assets, how liquid is that asset going to be? Versus if you were to also put it into something like a dividend-paying whole life insurance contract, the chances of you being able to access money that you're putting into this particular type of asset that we're talking about, that we advocate for, is you're going to have a lot more liquidity to that, and with a lot less conditions. The trade-off to that, though, because if you put it inside of a piece of real estate, you have to sell it in order to access that equity again. And the value of how much you're able to get out it could be way less or way more, right? And the same goes for a piece of land. Although with a dividend-paying whole life insurance contract, it's much more liquid, but you do have to qualify up front, where you don't have to qualify you do have to financially qualify, but you don't have to medically qualify.
Yeah. Yeah, that's right. Yeah. If you're going to the bank for a mortgage, one of the things that I told her in this conversation was the effort that it takes for me to manage a whole life policy as an asset, and where a place where I funnel money, or store money. The effort that I have to put in is a lot less physical than if I had to manage a rental property. And that alone is a perk for me, because where I spend most of my time is with my family and in my office. So that is a perk for me.
Yeah, it absolutely is. I mean, and I would say that whether you own a piece of real estate, or whether you have a dividend-paying whole life insurance contract, administration should be something that a lot of people consider too. Like, where are you at in your life? Are you organized in that way? Do you have someone else in your life who could help you organize? Having an accountant to help you, like a bookkeeper or an accountant, help you to organize what needs to get done around a piece of real estate is different than with the dividend-paying whole life insurance contract. You can't abdicate that to a bookkeeper. You yourself must manage the comings and goings of money moving in and out of that. And no bookkeeper, nor should you ever abdicate it to any bookkeeper, because it's your money.
Yeah. So that was just an interesting conversation that I thought, hey, let's talk about that on the podcast, because I'm not against rental properties. Like, maybe one day I'll own a rental property too. But in that case, you could put your money in a whole life policy, because I know you have some people in your life that should have life insurance. So
you could actually do both, right? You could have like a dividend-paying whole life insurance contract, and then have money sitting in the cash values. And then if you really wanted to still do a piece of real estate, you could still do that, right? And the upside is that you would also have some permanent life insurance. So did you want to add any more to that piece?
No, I think that kind of covers it.
Mm-hmm. So I got an email this morning from a gentleman who just had subscribed to our introductory video series over the course of the holidays, and had responded to one of the videos that he started watching. And he just started off with saying, hey, good morning, ladies. I'm already using IBC in my life. So this is not a client. And of course, this person's saying, hey, I'm always looking for more ways to learn about the infinite banking concept. And he said that he's read the book many times. And what really hit home for him with Mary Jo's book, From and Without the Bank, was the chapter on being too old to start infinite banking, where Mary Jo compares a 35-year-old to a 55-year-old. And he goes on to share, you need to think about what stage in their life are they at. As a 35-year-old, probably with a family with small children, would need more death benefit, compared to a 55-year-old where their children are probably already grown. Now, this person does go on, but I'd like to leave the second half of his comments for another episode. But just if I could leave off with just that piece. It's interesting where people always say, like, I'm already using IBC. And then they go on to say, I love what you do. I like to keep learning. And I like what this part says. But I also think that if you're a 55-year-old, your need for death benefit is not as necessary as someone as a 35-year-old. So I'd like to take a moment to unpack that for a little bit. Because number one, I love how this gentleman reached out and said that he's always wanting to learn. And I would say, yes, you do. You need to keep learning about how this concept works, because if you truly, when you really truly start to understand what the infinite banking concept is, this isn't about how old you are or what stage of life you are at, right? When we're talking about when you're 35 and you might have a family compared to when you're 55, we're having a life insurance conversation. We're not having an infinite banking conversation. This is the mindset of how people think about life insurance, how old you are, what stage of life you are, if you need life insurance or not. That's a life insurance conversation. That has absolutely nothing to do with infinite banking. Infinite banking is about your ability to finance your life. Who is the owner of your debt? Who is the banker in your life? It's replacing the banking function. It is very much the management of how you spend and save money in your lifetime. And whether you're 35 years old or you're 55 years old, we're all still spending money.
I love that. First of all, I love that we got some feedback, because it's not often that we do get feedback. So I love that this gentleman took the time to provide that feedback. I love that he says he's always learning more, because so many people have a rival syndrome or get hung up on the, nope, this is how I feel. This is my opinion. No, I'm not open to learning more. But what are you missing out on, right? And so I think it is very easy, and that's so many birds on our shoulders chirping all the time. It's so easy to sometimes fall back into the insurance mindset instead of the infinite banking concept mindset, because like you always say, Winnie, like infinite banking is a mindset. And that's the first and foremost thing that we need to remember, that it is a mindset. The vehicle that we use is the insurance, and it has to be properly structured. And need for death benefit, every single person's different. So
Yeah, thanks for mentioning that. So like a couple of different things that came up while you were chatting about that. I just thought of Nelson here. And again, we wouldn't even be here chatting if it wasn't for Nelson constantly wanting to learn, wanting to make his life better. Like, I mean, right up until, the day he graduated to heaven, he always had books. Every time I picked him up from the airport, he always had a book in hand. He was always suggesting like a reading list of things that we could really learn a lot more about. And so that's really amazing to this gentleman who reached out to us. And the second piece is, if we're to take off our IBC hat and let's just put on our insurance hat for a quick second. Okay, so let's just drop IBC altogether. This comes up quite often for those people who rationalize that a 55-year-old, their need for insurance is not going to be as much because their kids are older and all that sort of stuff. And their debt is maybe perhaps less. Hopefully that is your case. I would say, especially if you have a dividend-paying whole life insurance contract, the bonus is that you're going to get more death benefit whether you like to or not. And that's the way that a properly designed contract ought to really look like, especially if you're wanting to practice the mindset of IBC. Again, setting that aside for a moment, if we take a look at all the different things that the people we care about, including ourselves, and what we'll need money for and how much things cost, everyday things has gone up. The cost of homes in the city, the cost of land in the rural areas, right?
The cost of cattle.
Yeah. And the older generations are wondering, how can our kids or future generations, never mind if you don't even have kids, but how can future generations have the ability to afford buying a piece of land or a home? There's lots of interesting, resourceful ways to have a place to live that they can call on their own.
Yeah, there's actually a family in our area, they're building this huge house and it's going to be 3 families living in the same house. I'm like, more power to you, but I guess they're each going to have their own section of the house. And I don't know them at all, but I just know that that's what's happening.
Oh,
it is happening.
Oh yeah. It can happen for several different reasons, but I would say, again, what you're doing is you're helping future generations by keeping and having more death benefit and being able to leave it behind tax-free to your next generations. It's going to be able to help them be able to stand on their own 2 feet, not have to get indebted in life and have to buy that piece of land or that home.
Yeah.
Right? It actually is a solution to being able to help our future generations afford things that are going up that weren't as expensive before. So that is my thought process around that.
Yeah, I think there's a somewhere along the way we got onto the mentality of like everybody needs to pave their own way. And I do believe that to an extent. But I think we also got away from, hey, did you know that life insurance can actually create generational wealth? And then if we teach our kids the importance of being a good steward of the money, being a good steward of the land, and the things that we're given, that it just creates that snowball effect where each generation it gets a little bit easier. Not saying that I want to pave an easy road for my kids. I want them to know what hard work looks like and you got to work for what you want. But if we can add this missing piece to that puzzle that just accelerates things and makes it that much better, I'm all for it.
Right. So yeah, in other words, like this is good as long as you know that these tax-free dollars that you're leaving it behind so that it doesn't just vanish into thin air. You're actually leaving it behind to people who have demonstrated that can handle this windfall of capital that comes in.
So yeah, good episode. I hope that that you find value in that. And we are starting off 2026 with the bang. I'm starting it off with the cold, so excuse me for my couple of times I had to blow my nose. I haven't been sick for a long time, but yeah, excited for 2026. Excited for the families that we're going to help implement this amazing concept, and just grateful for Nelson and the road that he paved, and Mary Jo and you. And yeah,
Me? Are you talking about me?
Yep. So yeah, let's get on this rocket ship. So you know where to find us, rancherway.com. That's where you can start with the book bundle. You're going to get the paperback copy and the audio version. So it's a game changer for people who are on the road, in the tractor, in the feed truck. And you can find us on YouTube. You can watch our episodes, Spotify, iHeartRadio, and Apple Podcast.
So glad you leaned in with us on the Winnie podcast. We truly hope you're feeling more informed and empowered to take another step towards optimizing your financial life. Right now, make sure you hit subscribe so you can keep growing and learning with us. Until next time, we wish you prosperity in every area of your life.